Hi, good morning, everyone. Thank you for joining us at our Prestige PEO webinar series. My name is Carrie Kaiser. I'm Senior Marketing Operations and Event Specialist here at Prestige PEO. Today's webinar will focus on the benefits of MassMutual whole life insurance and this exclusive opportunity to enroll during this special enrollment period. Joining me today is John Manning, Insurance and Financial Advisor from MassMutual. Our webinar audience members will be muted by default. However, we encourage you to make use of the chat feature to pose any questions you may have. John will be addressing questions throughout the presentation. Additionally, the webinar is being recorded and will be made available on our website at prestigepeo.com/webinars for your reference at any time. Now we'll get started. Welcome, John.
Thank you, Carrie. Good morning, everybody, and thank you for your attendance this morning. I appreciate your time. So MassMutual and Prestige have teamed up to offer all employees and employers a unique opportunity to enhance their personal protection and retirement plan. So a whole life insurance policy from MassMutual not only is a life insurance policy, but it collects assets in the form of cash value, and it can be used in the future to supplement retirement or as an emergency fund at any time. The program offers guaranteed issue, simplified issue, individually owned whole life insurance policies that grow cash value with guarantees. Now, there's never going to be any medical or financial underwriting at all. There are no tests, there are no medical exams, no checks for pre-existing conditions or doctor's records needed whatsoever. The first $10,000 worth of life insurance up to $100,000 is guaranteed issue no matter what possible issue you may have. Regardless of your current health, whether it's great or not so great, the first $100,000 is guaranteed. Additional coverage from above $100,000 up to $250,000 simply requires answering a few qualifying questions and will have no bearing on the first $100,000. The offer is actually repeatable annually, so if you qualify, every year on the policy anniversary, an employee can re-enroll for another up to $250,000, so could conceivably have $1 million of coverage after 4 years. I welcome questions at any time through the chat, but I understand sometimes people want to think about it and questions may come to them later. So as you see on the screen, that is my direct phone number, my email, and the calendar link. If you wanted to set up a one-on-one through a Zoom call. And the whole life policies kind of work like this. If you were to purchase a $100,000 policy and that policy premium contribution was $20 a week, every week out of your paycheck, $20 would be deducted, and that $20 would go into the cash value inside your account. So after weeks and weeks and months of contributing to this policy, you're going to have growth inside your cash value. And as that cash value grows, it's going to make that death benefit also grow. So after several years, if you had $5,000 or $10,000 saved inside that cash value, that death benefit that was initially $100,000 would now be $105 or $110, and off it goes. And you have access to that cash value in your lifetime. So if you had an emergency where you needed funds to do home repair, or if you wanted to take a vacation or pay some bills, you can access that cash value if you didn't want to access any of your marketable accounts if the markets are down. And you can pull that out penalty-free, tax-free. There's no 1099. There's no reported income. You don't pay tax. You don't pay fees. Simply take the money out like it's an ATM. You can do your home repairs with your $5,000. You can pay your bills, go on vacation. The cash value would go down by what you pulled out of it. And the death benefit would also be reduced only by what you pulled out. And you could pay it back in the future or not. Ultimately, you would have that deficit on the policy forever. And if you passed away, hopefully at 100 years old, the death benefit would only be reduced by what you borrowed out of the policy. I'm going to go through a few slides here and share with you some information on life insurance and more specifics to the plan. As you would imagine, MassMutual studies life insurance and families in the U.S. Quite extensively. And nearly half of U.S. households have no insurance at all. That could be a dangerous proposition. 1 in 3 only have group insurance, and group insurance is typically offered through employers, but it's temporary insurance. So if you were to change jobs or retire, those policies usually go away, and they're limited in their scope. Sometimes it's one-time salary or something along those lines. And as you get older, the group policies can reduce or get more expensive. Again, nearly 1 in 3 said they need more insurance, but haven't gotten around to it. Maybe they're not interested in the rigmarole that comes with some life insurance policies other than this one. And more than half of employees prefer to get their benefits through work, like a great company like PrestigePEO. And this is just another offer that they have through payroll deduction that you don't have to really think about. So there are 7 circles on this slide, and I'm going to talk to each one of these features of the life insurance premium, a life insurance policy. The first one is guaranteed level premium. I love using the word guaranteed. I don't get to say it often, but I can guarantee that your initial premium that you select this week or this month will be the same forever. It is guaranteed. So in that example before, if that premium was $20 a week for that $100,000 policy, it's guaranteed to remain the same next year, in 5 years, in 10 years, in 20 years. It will never go higher. The next guarantee is the second bubble there. Guaranteed increases in cash value. When your premium contributions come in through your payroll deduction and they go into the cash value, no matter what happens in the markets, the cash value can never go lower and it must go higher. There's a guarantee to that moving forward that if you have $5,000 in your cash value and the stock market goes south and the bond market goes south, your cash value must go up every year. And again, the third guarantee is guaranteed death benefit. If somebody signs up for a $100,000 policy, that entire death benefit is guaranteed from day one. You don't have to work up towards that threshold. Guaranteed death benefit from day one. The applications are very simple. All employees should be receiving an email with a link to the website. It's very intuitive. Your password and your PIN number are on the instructions on the email. It's your social security number, and then their PIN is the last 4 digits of your social plus the 2-year digit you were born. And it's very easy to do. Please, if you have any trouble, contact me with those numbers I gave out before, or get on my calendar invite. Those kind of work very easily. We can get through it in 15 minutes or less. These policies are also dividend eligible. And what does that mean? MassMutual is a mutual company. So we're not listed on the New York Stock Exchange or any other exchanges. We are individually owned by our policyholders. And that's why we are a mutual company. We are mutually owned by our policyholders. So instead of paying dividends to stockholders like other companies do, MassMutual pays dividends to our policyholders. And those dividends go into your cash value. And they also go to increase the life insurance amount every year. So it makes MassMutual and other mutual companies a little different from other companies that sell insurance. There are 2 riders that I want to talk to you about. First is the waiver of premium rider, which means that, heaven forbid, any of my clients get sick or injured to the point where they're disabled and they can't work anymore. Well, we will waive the premium if that's the case. We don't want anyone's life insurance premium to become a burden as they're going through a tough time in their life. So if anyone gets sick or injured to the point of disability, we will waive the premium moving forward, and the life insurance will always be in place. The second benefit is the chronic care benefit, which serves similarly to a long-term care rider. Hopefully never, but later in life, if any of my clients have either any neurological disorder, such as dementia or Alzheimer's, where they have trouble processing their thoughts, or if they have trouble with what they call 2 of the 6 activities of daily living. Activities of daily living are like walking, feeding yourself, getting dressed and grooming, using the facility, bathing and transferring. If later in life, again, hopefully never, you have trouble with those things and you need some help, whether it's nursing care or to build a ramp on the stairs or something, if you qualify with those 2 of the 6, MassMutual will offer you half of the accrued death benefit and a lump sum, tax-free, of course, to pay for those nurses or to put in that ramp in your house or whatever it is you need. Or if you want to take the money and go on vacation, you could. Anyway, and the last one is, again, these are permanent life insurance policies. So if you live to 105, and God bless if you can, that life insurance policy will still be with you. And they're portable for life, which is very important. So if you do leave the company that you're working for and you leave PrestigePEO, or if you decide to retire, move down to Florida, or if you, for whatever reason you leave the company, you don't lose what you've built up. So we would simply change the $20 a week payroll deduction to a monthly electronic funds transfer from your checking or savings account, and the policy would stay with you. So this is an individually owned benefit that's yours to keep. So for employees, you must be between the ages of 18 and 75, and the smallest policy amount is $10,000 worth of benefit in any $5,000 increment up to $250,000 per year. And that's for all employees, age 18 to 75. Also included in the offer is dependent coverage for spouses, children, and grandchildren. Now, the employee issue age is 18 to 75, but for spouses, it's from age 18 to 60. So they're limited to 60 or younger for your spouse. And children and grandchildren, they must be 2 weeks old or under 26 to begin. It doesn't mean that policies are taken away once a child reaches 26. That's not the case. So long as they're 26 or younger, they can sign up for a policy and it will be theirs for their whole life. That is what whole life is. Now, the only face amount for dependents is $25,000, not greater or smaller. It's the only size lot. And the one caveat is that the employee must buy at least $25,000 on themselves for their dependents to be eligible. And these policies work exactly the same way with the cash value and the benefits. You know, people can sometimes overestimate, I guess, the cost of life insurance. So here's a few examples. And this is for a $50,000 life insurance policy, whole life insurance policy from MassMutual. So if you were to start this policy at age 25, the cost per week would be $7.39 per week for the rest of your life, guaranteed. If you were to wait and start until at age 45, well, then that initial price would be $18.81. Again, that would be level premiums for life, guaranteed. And then at age 55, it would be $33 a week for life, never to raise, guaranteed. And everything in between there, it's very linear. So if you were 25 and you wanted $100,000, it would probably be right around $14.80, maybe a small volume discount. And here's just a peek of the guaranteed cash value after 25 years. I can't speak to what the dividends will be, so this is only the guaranteed amount. With dividends from the MassMutual over 25 years, I would imagine that this number would be at least doubled. So for 45-year-old after 25 years, you have 20,000. I would imagine with the dividends, which MassMutual has never missed, by the way, since before the Civil War. They paid a dividend every year. I just can't guarantee what they're going to be in the future. All right, I guess I can't guess what they're going to be in the future, but with dividends included with the guarantees, it would be much more than that, actually. Okay. So I spoke to the first 100,000 being guaranteed no matter what. If you wanted greater than 100,000, these are the questions that you have to answer, actually, no matter what. So the first question is, within the last 12 months, do you use tobacco or any nicotine products at all? That's just a yes or no question. It means you get tobacco rates or non-tobacco rates. It's not a knockout question. And there's no test for that. The second question is, are you actively at work at your usual and customary location, maintaining your normal work schedule, performing your normal duties? In other words, so long as you're not out on short or long-term disability, you're actively at work. Even if you're on vacation, that's actively at work. So you say, yes, I'm actively at work, and you qualify. If you had answered no, you'd have to wait until the next enrollment for you to get off of disability. So you'd say yes to that question. And then there's a 2-year look back only on this third question. During the last 2 years, have you sought treatment for, been diagnosed, or seen a medical professional as having any of the following: cancer, heart attack, coronary artery disease, heart failure, drug or alcohol abuse, diabetes for which the recommended treatment is insulin? So if you're on metformin, or if you're on some other program or some other holistic program, you're not taking insulin, you say no. I am a diabetic, but I'm not being treated with insulin. The next one is COPD, emphysema, other chronic lung disease, stroke or TIAs, kidney disease, kidney failure, Parkinson's, paralysis, cirrhosis, or HIV/AIDS. And hopefully you haven't had any experience with this, and you'll see after you answer these questions, the offers will flood up to $250,000 of coverage. If you said yes to question number 3, then the program will only offer up to $100,000, show you the different prices from $10,000 in any increment up to the $100,000 guaranteed threshold. So those are the questions. Again, if anyone has any specific questions about this, write in the chat, or you can call me or send me an email or reach out however you want. So this is just a reiteration of some of the things I said, but why would I buy whole life insurance through my employer? One, it's the opportunity to buy what was traditionally just a product sold to executives. And now everybody can get a cash value whole life insurance policy from a company like MassMutual. Again, convenience of payroll deduction, lock in the one price, no medical underwriting, like I said, no doctor's appointments, no blood tests, and it's portable. And the portability is one of the great parts about it, because it's yours forever. You're buying something that's going to be part of your financial plan for a long time. How do you sign up? You should receive an email today with a link to the website. If you didn't, give me a call. And you click on that link, you put in your PIN and your password, and off you go. The website looks kind of like this. Right here in the bottom left corner, you put in your username, again, social security number, your PIN number, the last 4 digits of your social, plus the 2-digit year you were born. So if you're born in, if your last 4 digits are 1, 2, 3, 4, and you're born in 1999, your PIN number would be 1, 2, 3, 4, 99. And then you select the MassMutual worksite policy. Now, one thing I want to circle back on is these policies can help individuals 4 ways. That cash value in the policy is there for while you're alive. The death benefit, God forbid, will be paid to your beneficiaries in the event that you pre-deceased life expectancy. That death benefit goes right to your beneficiaries tax-free. If you get hurt or injured, it's there to help you with the waiver of premium. And later in life, if you get sick, it's there to help you with your doctor's bills. So it helps you if you get, whether you're alive, if you pass away, if you get hurt, or if you get sick. That's kind of it for me for now. I do appreciate your time. I know I speak a little quickly, so I apologize for that. But on the emails that have been sent out, it is the link to my calendar and my direct phone number and my email. So if you have any questions, definitely reach out. And I thank you very much, everybody, for your time this morning. And I hope you have a wonderful day.
Hi, John, thank you. I did see one question come in. Is there any tax benefit?
Yeah, that's a great question, as all questions are. So these policies are paid with post-tax dollars. And the tax benefit is that any withdrawal of the cash value comes to you tax-free. So if you were to fund a life insurance policy, and hopefully nothing ever happened to you when you get to 65, and you've got cash value saved in there, let's make up a number that you have, I don't know, $40,000 or $50,000, depending on the size of the policy you bought. Your withdrawals from your cash value throughout retirement will be tax-free forever. In a 401k and other IRAs, which I love, I have them myself. I know that I have a partner in those assets when I get to retirement, that when I pull money out of my 401k, since they've been tax deferred for so long, I'm going to have to pay taxes on that. So if I'm in the 25% tax bracket and I pull out $1,000, I get $750, the government gets $250. But with withdrawals from your MassMutual whole life cash value, they're 100% tax-free. And you can actually take that cash value at that point and annuitize it to guarantee a payment to you for the rest of your life. Depending on the size of the cash value, it would depend on your monthly check from MassMutual, but it can guarantee an income stream forever that would be tax-free.
Great. Thank you, John. I think you answered all the questions.
Okay.
So thank you so much for your helpful presentation, and to everyone who joined us today. The recording of this webinar, along with John's information, will be available on our website at prestigepeo.com/webinars. If you have any further questions, feel free to contact your benefits specialist or John for further assistance. And don't forget to check your inbox for our monthly Insights newsletter delivering the latest HR news, and connect with us on Facebook, LinkedIn, Instagram, and Twitter for the latest information at PrestigePEO. Lastly, don't miss out on our Prestige Go mobile app, which provides access to benefits information and on-the-go support from your HR team. Thank you all, and we look forward to seeing you next time.